Pramod, ex-China, in a situation of rates moving higher, when you think about banks out here in Asia, a lot of them are very dependent in terms of loan growth on real estate, on property, obviously, right? Isn't that a worry?
Not really. Actually, the banks are quite well diversified. So, whether it's the construction and real estate sector or it is mortgages, you wouldn't see that being. Of course, it depends upon like which bank you're talking about. But in general, we don't anticipate any issues with these particular sectors. The banks are well diversified, and we do anticipate, as I said, mid to high single-digit loan growth, and that incorporates a wide degree of sectors. Even for banks which are more dependent on the mortgage market across different jurisdictions, we do anticipate that thanks to the base GDP growth that's there and the income effect that comes through, you will see good growth coming through. So we don't anticipate serious problems or problems of any definition, actually, when it comes to either the real estate sector or the mortgage sector.
All right, Pramod, talk to us about capital management and divs for banks. And here, let's sort of net out the four pillars in Australia, which have been having problems for a while. How do the other banks look, though, in terms of their ability to satisfy investors that way by either maintaining or even increasing dividends?
So when 2020 came around, a lot of regulators were very cautious about what you could do as far as dividends were concerned. Few jurisdictions canceled dividend payments by banks outright. But when you came to 2021, regulators became a lot more comfortable because banks were able to manage their capital situation quite well and had provided quite well. And so entering into 2022, we do anticipate that it's going to be a good year for both bondholders as well as for shareholders when it comes to returns. And we do anticipate that banks would be more free to make the dividend payments that they really want to. We do anticipate that profitability is going to improve across the banks. So from a payout ratio perspective, dividends will then definitely be going up. Banks were also quite cautious over last year, and so many of them chose to be a little bit more cautious than they could have been. This year, of course, we've seen Omicron coming through, and it's unclear what kind of variants will go through. But in general, banks should have a proclivity to be paying out, and so we do anticipate that the CET1 ratios of the banks will gradually decline this year compared to last year.